Good morning, investor. Welcome to the Real Estate Investor News Channel. I'm glad you're here. It's Thursday. What's today? What's today's day? The 9th, I think. Um, but yes, welcome to the Real Estate Investor News Channel. This is your host, Tony Moreno, and I'm glad that you're joining me here today. It's a day closer to the weekend, and I appreciate everybody listening in. If you're whether you're on YouTube, on Facebook Live, on Instagram Live, wherever you're listening to this. I appreciate the support. Be sure to subscribe to our channel because that is the way we grow. And I have three amazing stories that I think investors are going to enjoy. So for the first story, we got home prices are falling in these 10 markets. In 10 markets, we'll discuss what those 10 markets are, so investors can avoid or do more due diligence when they got investments in that area. Why fraudsters may be partly behind your high rent and other problems at home. That's for our second story. And then for our third story, we got these states and cities are becoming uninvestable due to politics. We're going to discuss why that is and why politics are involved when it comes to these cities. So yeah, again, if you haven't yet, be sure to subscribe to our YouTube channel or on Spotify, Apple Podcasts, wherever that may be. I really appreciate the support so far. So let's get right into it. Our first story, we got home prices are falling in these 10 markets. Are they ripe for investing? Let's see what this is. So after 2 years of elevated interest rates and inflated prices, new data from realtor.com shows that house prices have begun to fall in certain cities across the US. So just to kind of and I'm going to narrate this, at least the top 5 cities that are losing year over year price. If in case you're listening to this I cannot get my words together today, via podcast. At number 1, we have Miami, Florida, losing 8.2% year over year, the home prices in value. Oklahoma City at 7.4%, Cincinnati at 6.4%, Kansas City, Missouri at 4.9%, and Denver at 3.6%. So let's discuss some of these. The Midwest, it could, well, we're not going to discuss it in detail. Actually, I jumped over as part of this article. We're going to jump as to why the Midwest is doing better than these. So it says here, prices drop in the Midwest again, result in cheaper houses coming on the market. Could the sweet spot for investors? This could be the sweet spot for investors for several reasons. The first being lower prices make it easier to cash flow. I don't agree entirely with this, and the reason why I don't agree entirely with it because just because the prices are cheaper, it doesn't mean that you can cash flow more, because you could have a market that the houses are more expensive, but rents are higher as well. And the same thing, a market that the price of homes are lower, but rent is also lower. So really, it depends on, I guess you could say, on your 1% rule, which is not really a rule. You can call it a 2%, 1%. It's all the same thing. As long as you have a gap on what your mortgage payments plus your repairs, vacancy, whatever those rates are, and you have a gap between that and your rent, that's where you want to look at. So not necessarily because it's cheaper, that means you can actually cash flow. So I don't agree entirely with that. The second thing is short-term rental rules are not so stringent and could work well in college towns and near sporting venues. And that is very true. So like places like New York and things of that sort that are getting very strict with Airbnb and short-term rentals, you might want to move away from that, as that is your sole business. Traveling nurses working in major hospitals could be a potential audience for mid-term rentals, and that is also true. I've had nurses stay in my midterm rental house, and they have been great tenants because they stay for a while, and for the most part, the hospital pays for their stay. And the last one, many Midwest cities such as Pittsburgh have reinvested themselves as a tech town and offer employment in established international tech companies. A lot of these towns are changing their industry, so be in the lookout for those so you can invest properly. Excuse me, let me get myself some water. Um, Sorry about that. For our second story, screen, why fraudsters may be partly behind on your high rent. Not on your high rent, behind your high rent and other problems at home. So it says here, inflation, undersupply, high demand, exorbitant home prices are often reasons cited for why rents are high. But there's another few few people talk about rampant fraud. Since the pandemic, rental fraud has exploded nationwide. And when I was reading this, I was like, what do you mean rental fraud? And the article explains it, which is what we're going to be talking about. The fraud occurs when people use false identities to rent an apartment under false pretense or for criminal purposes. Owners and property managers say. Now, this is interesting because I usually do a background check and I usually ask for the applicant's ID, which if they can, you know, they can fake that by all means, they deserve to trick me in that way because but the reason why I question that is because does that mean these landlords are not running background checks on people? Makes me wonder. But anyways, let's continue reading. Fraud is bad for everyone. Landlords lose money and time evicting fraudsters, and honest renters may experience rent increases to compensate property managers and industry experts say. Now, this is obviously wrong. I don't think people should be penalized for others being fraudulent, for others doing wrong. That is completely wrong for landlords to do this. And if this is the case, then those landlords, that's why landlords always get like a bad tone to it because of when they do stuff like this. If you're a good renter and you pay your rent on time and stuff like that, I don't see why I would be penalized for other people doing incorrect things. So I do not agree with them doing that. Even worse, honest renters and staff may have to deal with unruly and sometimes dangerous neighbors, and that is scary. But that's why people should, especially landlords, should always run background checks. It's pretty much it's pretty easy to do. You can do it with apartments.com. You can do it with a whole bunch of companies. I don't even have to list them, but obviously make the applicant pay. Don't do it out of pocket. And it ranges from like $30 to $40, $50. So make the tenant pay that for their own background check and ask for their ID. This world is very high tech. So ask for a copy of an ID and send them the link where you can do the background check. It says here, fraud-related losses can reach tens of thousands of dollars per incident, and some of that might be potential offset with high rents, industry expert says. A 2022 study in the Urban Institute says that landlords who miss rental payments were most likely to raise rents by higher percentages and were more stringently screening tenants. I think they need to screen better because that is not, again, I already said what I needed to say. And then the last portion I read here for this article, it says pandemic-related eviction moratorium lasts well into 2021, preventing tenants from being evicted for almost any reason. Property managers said that emboldened, I don't know how to say that word, fraudsters who knew if they could sneak their fake documents through screening process, they wouldn't get kicked out. Now I can see like if a lot of tenants, they thought that they weren't going to be affected by just spending a whole bunch of days without paying. And now that they're affected, obviously this evictions is on the records. And if a landlord does his screening, they're not going to take that tenant in. So that could be that's what they're saying. That's the reason why the fraudulent transactions are increasing with tenants. And for our third story, we got these states and cities are becoming uninvestable due to politics. What does this mean? There's been a narrative over the last few years that more Americans have started voting with their feet and leaving higher tax states in favor of lower tax states, which is, this is something that, it's no secret. If it's a state where there's high taxes, people are going to move out. That's why people are moving out of California, New York. And actually, this chart here says the population change from 2022 to 2023. You see the states in red. And again, if you're listening to this as you drive, I'll kind of narrate it. New York, California, you got Oregon, Illinois, Louisiana, which surprisingly, I didn't know Louisiana was like that. These are states where people are moving out of, and people are more going to Texas, of course, Florida, South Carolina. You got Idaho, North Carolina, and these states are more over in the southeast. And also people leaving out of Hawaii as well because of, well, let me not say because of, we're talking about it in the article, but people are moving out of those states, going into the other ones that I mentioned, Texas, Florida, North Carolina, South Carolina. And it says here, Texas and Florida are the two fastest growing states by population. Not coincidentally, they offer a compelling mix of no state income tax and less cost climate compared to most other states. Now, this is the tax burden, the state income tax, and I'll discuss And again, this is like, I guess you could say, the tax burden, meaning this is what the state charges for state income tax. Of course, New York coming at number one is 12%. California coming at number five is 10.4. Mostly the states in the New England area, Rhode Island, Maine, Connecticut, Vermont, those are in the double digits percentage. Minnesota as well, which I didn't know. So obviously those states where income tax is high, people are going to go ahead and move out. And that's what we saw in the first chart here. And then, of course, you got people like Tennessee at 6.1, Wyoming at 5.7, Texas at 7.6, Florida at 6.1. These are states that are literally almost half of what the California and the New Yorks are doing. So obviously, these politics affect to where people move. Because again, I mean, taxes is it's like what, like 30% maybe of like what people pay on their income tax, something like that. I can't remember the stat, but it's a really, really high percentage. But anyways, those are the three stories that I have today. I will share these links in the show notes so you can see them on yourself. I appreciate everybody listening in. If you haven't yet, please, please, please subscribe to our YouTube channel, on Spotify, Apple Podcasts, wherever you listen to this. That's the way we grow, and that's the way you support me. So I appreciate everybody listening in, and I hope everybody has a wonderful, wonderful